Hello and welcome to the weekend market update. Today is 21st of January. You're looking at the daily chart of S&P 500. S&P had a strong day on Friday, up 1.89% to close at 3972. Now, I have levels drawn out right here. So let's have a look at the levels and see what those levels are, and then we'll talk about potentially what could happen next week and beyond. So this line right here, which is around 39.10, 39.15, is an important level. So last Wednesday, it got rejected at around just over 4,010, and it closed slightly below this level. This is an important level because you can see it acted as a support here, resistance, support. So this level is important. So it managed to reclaim it on Friday. Now it defined its range last week. So the 4,010 on the upside and 38.90 or 88 on the downside. Those would be the range that it has defined. And you can see that these are marked by levels where it has support and resistance. So next week, if it's able to get through this level, 4,010, then I would look for it to move to this level, which is around 4,150. If on the other hand, S&P 500 closes below this level, 38.90, then this level comes into play, which is around 37.80. So those would be the levels to watch out for. 4,010 on the upside, and then 38.90 on the downside. If 38.90 gets closed under, then next area of support would be around 37.80. If we look at the momentum indicators just to see what are they telling us. If you look at MACD is moving higher. It has crossed above the zero line. So this is positive. RSI is bounced off the 50 level, so RSI remains above 50. So on a daily basis, momentum indicators are positive. So on a daily basis, I would say that the picture is more positive than negative. Last week we said that S&P 500 was overbought based on the stochastic. Wednesday and Thursday's pullback released some of this overbought condition. So now I think there is room for a little bit more to the upside. The question is whether S&P 500 can get through this 4,010 level. If you look at the weekly chart, you can see that on a weekly chart, you can see that let's look at here. This is a better. This is the weekly chart. You can see that this level has the potential to be a higher low. In October, it formed this low. So this has the potential to be a higher low. Equally, this level has the potential to be a lower high, because you can see that since reaching this level, there is a lower high. There is a lower high right here, another lower right here. So this could very well be another lower high. So at the moment, S&P 500 has the potential to make either a lower high or higher low. So because you can see we have a trend line right here, we've got another trend line, S&P 500 boxed in the middle. So if it breaks to the upside and closes above this level, then this becomes the higher low. If on the other hand, if it breaks to the downside and closes below this level, then this becomes another lower high. So it's very important to see which way it's going to break. Now, what would be the catalyst for a breakout of this range? Well, earnings. We're in the midst of earnings. Next week we have, I think, Microsoft and Tesla reporting. They have the potential to move the market. So I would expect some reaction after those earnings. And then the week after that, we have the FOMC meeting on 1st of February, which also has the potential to move the market. So I think in the next couple of weeks, the combination of earnings and the FOMC meeting will provide some guidance as to which way S&P 500 wants to go. Now, if I look at the weekly momentum indicators, I can see that RSI is barely above the 50 level. Now, it has previously, during this bear market, been above the 50 level 3 times, but then it fell below that. So we're not sure whether or not this is going to be able to stay above for too long. If you look at the MACD, it remains below the zero line. So the momentum indicators are not yet flashing a buy signal. But on a daily basis, I would say that the picture is more positive than negative because of the fact that the momentum indicators are in positive territory. If I look at SPY just to see what those levels are, so for SPY, the important level is 400 on the upside and 388 on the downside. If 388 is breached, then I would look for a move down to around 380. On the other hand, if 400 gets taken out, then 410, 411 would be the level to 410, 411 opens up. Next, let's look at NASDAQ just to see what we see in NASDAQ. So this is NASDAQ 100. You can see Thursday, Friday, NASDAQ pulled back. It got rejected of this level, which is 11,700, but managed to find support around 11,300. And then big day on Friday, NASDAQ was up 2.86%, was up over 300 points. So if NASDAQ can take out 11,700, then this level comes into play, which is 12,050, just over 12,000. If on the other hand, 11,250 gets closed under, then I would expect to move down to around 11,700-ish. If we look at the momentum indicators, you can see MACD is moving higher and it's crossing just above the zero line. So this is looking positive. RSI remains above the 50 level. So the daily momentum indicators looks positive to me. But on a weekly basis, if you look at the weekly chart of NDX, you can see that it remains below this level, which is the 12,000. Could this be a kind of a double bottom? Possible. But at the same time, this could also be a lower high. We have a high right here. We have another lower high. This could also be a lower high. You can see that it also is forming a wedge pattern. So if I hide the, you see this, the lower line and the top line. So it's also forming a wedge pattern. The momentum indicators are not yet flashing a buy signal. You can see the weekly RSI is below 50. MACD remains well below the zero line. So on a weekly basis, the momentum indicators are not yet in positive territory. If we look at QQQ just to see what the levels are. So for QQQ on the upside, 285 is an important level. You can see that there was a rejection on Wednesday. If this level gets taken out, then the next target would be around 295, 296. If on the other hand, it closes below the 275, then 265 comes into play. But again, momentum indicators are positive. So, the technical picture is more positive than negative. If we look at Dow next, so where is Dow? Okay, here's the Dow Industrials. Now, after this big run up in Dow, you can see Dow had a correction and then we had a recovery, but this recovery wasn't able to get back to these levels. So this now is a lower high. Now, the question is, Dow also rebounded on Friday. I'm watching this level right here, which is around 34,000. If Dow gets rejected at this level, then we're going to have another lower high, in which case I would expect Dow to basically fall below this low and possibly to this level. So Dow is beginning to look a little bit weak right now because of the fact that it has made a lower high. I want to see whether the recovery, if there is a recovery, whether it establishes another lower high. If you look at the momentum indicators, they're now beginning to look kind of weak. RSI has fallen below the 50 level. Now, although it rebounded on Friday, but RSI didn't get back above the 50. MACD is just above the zero line. So I'm also watching. During this recovery, you can see MACD was quite weak. It wasn't able to rise anywhere near the previous high. And even RSI during this recovery was below the previous high. So you can see that the momentum indicators formed a negative divergence in Dow. So I'm watching to see whether weakness in Dow is going to spread to other indices, or if this is a rotation out of value stocks into growth. Remember, when Dow was bulling right here, the growth stocks like NASDAQ and some of the S&P 500 growth sectors had underperformed. Now those sectors we're going to see those sectors soon. Now those sectors are attracting buyers, and I'm wondering whether it's coming out of some of the value oriented stocks, and that's why Dow is underperforming. But it's worth noting developments in Dow. Let's have a look at IWM just to complete. So IWM also had got rejected at this level. So this is around 187, but it managed to find support right here. And IWM closed up 1.65. So near-term resistance would be this level. It needs to close above this level. You can see that it traded above this level but wasn't able to close. So I would be looking to see if it's able to close above 188. A close above 188 opens the door to this level, which is around 192. But if this level is breached around 180, then obviously it's going to show additional weakness. If you look at the momentum indicators, they're moving higher. MACD has just crossed above the zero line. RSI remains well above the 50 level. So momentum indicators look positive to me. So I would look for upside bias than downside. But I want to see whether or not it's able to get close above 188. Now, if we look at the bond market, just to see what's happening on the bond market. So let's look at TLT first. So this is TLT. So you can see that it closed. So this is an important level. It's about 106. If this level gets closed under, then this level comes into play, which is around 102.50. And the resistance would be right here, which is 109. This was the high set in early December. You can see that it has now formed a lower high, so it's showing some weakness. And if you look at the momentum indicators, they're also weakening. You can see RSI closed below this low right here, and you can see MACD wasn't able to get back up to this level during this recovery. So I'm seeing some weakness in TLT. I mean, that might be explained by the fact that if you look at the 10-year bond yield, the 10-year bond yield actually bounced on Friday. It was up 9 basis points. It was beginning to look weak after closing below this level right here, which is around 3.4, the previous low from early December. So this managed to recover. If bond yields continue to rise, this is the first area of resistance. This is around 365. Additional resistance would be around 388, 390, which was the high it reached end of December. So if bond yields rise a little bit more, then I would expect TLT to basically show additional weakness. If I look at the dollar, so what do we see on the dollar? So dollar continues to weaken. It's coming towards this level right here. So there is some support from May of 2022. The question is whether or not it's gonna find some support and rally. Now, if you look at the weekly chart of DXY, The momentum indicators continue to weaken. You can see MACD, it's crossed below the zero line, and I'm not seeing any sign of a crossover yet. It is still moving lower. If you look at RSI, weekly RSI continues to move lower and remains well below the 50 level. Having said that, RSI, stochastic are oversold, so I would be surprised if there is some kind of a rebound. But I'm not seeing, if momentum indicators continue to remain negative, MACD crossing below the zero line, this is not good. So if they remain in negative territory, I don't know that we're going to get significant rebound in DXY. So weekly chart doesn't look good to me. On a monthly basis, picture is not all that bad. You can see that MACD is just getting there, it's getting close to a cross. It hasn't crossed yet. If it crosses on a monthly basis, that would not be good. But monthly RSI is still above 50. So monthly momentum indicators are still positive. The weekly remains weak. The question is whether or not they're going to form some kind of a bottom and start to move higher. If so, then obviously I would expect some bounce. It is due for a bounce. On a daily basis, you can see MACD is, as price is moving lower, MACD is not. MACD remains well above. So if MACD can, form a higher low, that would be positive. But daily RSI is well below the 50 level and doesn't show any signs of that it wants to go higher. But having said that, it is oversold, and we could get some reaction at this level, which is around 101.5. If there is any rebound, then obviously this level, 104.8 would act as a resistance, and before that there would be some resistance around 103.1. But overall, it remains very much in downtrend, but oversold. Looking at VIX next, you can see VIX is hovering near this previous low right now. It closed below 20 again, 19.85. So it is oversold. I wouldn't be surprised if we get a bounce in VIX. Momentum indicators on a daily basis are still weak. MACD remains below the zero line, RSI below 50. But MACD is forming what looks like a higher low. If MACD is able to get back above the zero line, then we could see some move to the upside. So at the moment, momentum remains weak, but they could turn around. They are oversold. It is oversold. Even on a weekly basis, you can see that the momentum indicators are no doubt very weak, because you can see that MACD has crossed below the zero line and RSI is below the 50, but it is oversold. It found some support at this purple line, which is 38.2 level. So I'm watching this to see whether or not it's going to break to the downside, or whether it's going to rebound. Any rebound needs to get through this area of resistance, which is around 23. If we look at oil next, so here's the picture of oil. So you can see that it's been forming a base between 71 and 83. It's now come up to this level again. I can see that the momentum indicators are moving higher. You can see the MACD is just crossing above the zero line, and RSI is well above the 50 level. So I wouldn't be surprised if it breaks through this level, which is 82.50. If so, my next target would be around 88.5, which is this line right here. Now on a weekly basis, the momentum indicators are still weak. You can see MACD remains very much below the zero line, and RSI is below the 50 level. So I'd like to see whether or not they are able to move into positive territory, whether MACD can get back above the zero line. If MACD is able to get back above the zero line, then I would think that there may be something a little bit more serious. But at the moment, with momentum indicators are weak, I'm not calling for one. So if it's able to get through this level, 82.50, then we'll see what happens at the next level, what the momentum indicator is doing on a daily basis, weekly basis. So that's oil. I want to look at some of the sectors just to see what the sectors are doing. XLK, we'll go through these sectors very quickly. This is now beginning to act a little bit better again. You can see the MACD is crossing above the zero line. RSI is above 50. So this is a resistance area which is around 133. There was a rejection on Wednesday. If it's able to get through this level, next stop might be around 139, 140. But if this level gets closed under, which is around 126.50, then I think this would be negative. So any move to the upside obviously is going to be positive for S&P 500. XLC, this is communication. This one looks the most interesting to me because you can see it traded sideways for several months, and then now it closed. It has taken out this area, which is an important area. So it closed above this level. You can see the momentum indicators are moving higher. On a weekly basis, you can see that it has now formed a higher low, which is positive. You can see on a weekly basis, RSI has moved above the 50 level, but MACD still remains below the zero line, but it's heading in that direction. So if it's able to make further move to the upside based on the fact that daily momentum indicators are positive, that should put upward pressure on S&P 500. If we look at XLY, this is another growth sector. So you can see that since forming this low, it started to move higher. You can see MACD it hasn't crossed above the zero line, but it's heading in that direction. RSI remains above the 50 level. So momentum indicators are definitely more positive than they were, let's say, 3 weeks ago. So it's getting through this area of resistance. If it's able to get back above this Wednesday's high, then I think it can get up to 144.50. So any move to the upside is going to put an upside pressure on S&P 500. So this is a positive data point for S&P 500. If we look at financials next, so financial also had a correction, found support at this level, which is the midpoint of this two level. So if it's able to make further move to the upside, that's additional upside pressure for S&P 500. Momentum indicators do remain positive, but I do want to point out the fact that maybe this is a lower high. So we'll see whether or not this rebound is able to get back above this. If so, that would be positive. If we look at XLV, which is the second largest, you can see XLV is, after this big run up, it's going through a correction. So this is an area of resistance. So it needs to get back above this level, which is around 136.50. If it's able to get back above this, then maybe game on to the top of this channel. But on the other hand, support is at this line right here, which is around 131. So it's going through its correction. Obviously being the second largest sector in S&P 500, you want to see this move higher. While this is going through the correction, the other major sectors like XLK, XLF, XLY, those sectors are picking up the slack from this, and that's why S&P 500 is still able to move higher. If you look at some of the defensive sectors like XLP, you can see that it has been going through a correction. Now it's at the midpoint of this channel, which is basically the this high and this low. So this is an important level. You can see that it bounced off this level on Friday. So we need for it to get back above this line. We'll see whether it can do so, but the momentum indicators are weak at the moment. You can see MACD is moving lower, RSI is below the 50 level. Now, being a defensive sector, obviously this correction, you can understand it because it had a major big rebound. But if it's able to rally a little bit of this support, that should also put upward pressure on S&P 500. If we look at energy XLE, so XLE after this correction is gradually moving higher. I want to see whether it can get back above this line. This is Wednesday's high, which is 91.50. I can see that the momentum indicators are moving higher, but they're well below this level so far. RSI is also well below this level. So if XLE were to go up to the previous high, but the momentum indicators remain below the November highs, then that would create a negative divergence. So I'm watching XLE to see if it establishes a negative divergence. If we look at XLRE, this is the real estate. So after finding support, it's now come back to the top of this channel. So the question is whether it can get back above this channel. You can see that the momentum indicators are positive, MACD moving higher. So this is looking positive to me. So that's a positive data point for S&P 500. XLU, the defensive sectors have been correcting. You can see XLU also after this run up has been correcting. So this is the support area that it needs to hold. This is the midpoint of this low and this high. So overall, I would say that the sectors are more positive than negative. At least the growth sectors are. I'll show some chart to substantiate this point. So if you look at this chart, so we'll look at the weekly chart. So this is XLP versus S&P 500. XLP is a defensive sector. Defensive sectors tend to do well during market turmoil. When investors feel that market is going to go down, they move to defensive sectors. You can see it outperformed S&P 500 during COVID, but then underperformed after that. And then ever since the bear market started, you can see it outperformed S&P 500. Now it has started to underperform. That tells me that money is rotating out of some of these defensive names into growth sectors. If you look at XLU versus SPX, so again, this is utilities versus S&P 500. You can see lower high being formed on the weekly on this ratio. So again, this ratio outperformed during the bear market, see from here, and during COVID, but it has now started to underperform. So it looks like money may be moving out of the defensive name into growth names. If you look at dollar versus S&P 500, again, the same scenario. A dollar tends to do well during market turmoil. You can see during COVID and also all of 2022, but it is now beginning to underperform as this ratio is forming what looks like an inverted head and shoulder pattern. If you look at TLT versus S&P 500, this is bonds versus stocks. Now, generally, bonds tend to do better than stocks during recession. And at the moment, everybody expects a recession. The yield curves are inverted, pointing to recession. So you would expect bonds, investors to move into bonds. But based on this ratio, I'm not seeing that yet. That even though everyone expects a recession, but I'm not seeing any preference for bonds over stocks. You can see that this ratio is basically gradually moving lower. So I'm not seeing any kind of, because during COVID, you can see that TLT significantly outperformed SPY, but we're not seeing that yet. So even though everyone is expecting a recession, bond yields, inverted bond yields are saying, hey, recession is coming, yet investors don't seem to show any kind of preference for bonds over stocks. So just to summarize, S&P 500, just to summarize, go back to the daily chart. So on SPY, the key level is 400. If 400 gets taken out, 410 would be the level I would be looking for. On the other hand, if bears are able to push SPY below 388, then 380 comes into play, and then 370. So those would be the levels I would be watching. Momentum indicators are positive on a daily basis, so chances are we have a little bit more to the upside, but they are not yet signaling, they're not in positive territory on a weekly basis. So as long as the weekly momentum indicators remain in negative territory, the rally may fade. But those things can change if S&P SPY were to break out to the upside and hold on to the gain, then the weekly indicators would start to improve. So we'll see how things develop, but watch the 400 and watch the 388 level. Thank you very much for watching the video.